Hello and welcome, everybody. This is Chart Request Live. We do the show every Tuesday and Thursday right here on Stock Market TV at 1 o'clock Eastern Time. Myself or my friend Patrick Dunawilla from the Chart Report do the charts. You guys do the requests. And it's really one of the best things that we do, right, Pat?
Oh, absolutely. You're getting real good at that intro.
Yeah, the hello's getting longer. Have you noticed?
I know every time. I like it. It's a bull market. It's fine.
All right, let me know when it's too much because I'll keep going.
Oh no, I don't think you'll be hearing that from me. You want to get right into it? You got anything to say about the market? What do you think?
Yeah, it's a bull market, but this is a bearish engulfing. You see what's going on here today? Bull market, bear golfer. So what usually happens, I don't know what the hell that is, Pat. What usually happens in an uptrend when you get a bear golfer like that? You want to take a shot?
Uh,
What usually
what
happens?
usually happens? I mean, we
Yeah.
had a couple. This one reminds me of the one in May.
Yep. Great call, Gene. The voice of God is telling me my chart does not have a title on it. Guys, this is the S&P 500. JC keeps using my TradingView account. I'm kidding. It's really his. Where are we? Canvas? Watermark. This is the S&P 500. So again, it's not like this every time, right? Of course, there's going to be a nasty bearish engulfing one day, and the market's going to be in the process of topping, and you can point back and say, oh, that bearish engulfing worked. But for the most part, bearish candles in bull markets don't see follow through. What's follow through? Another down day, right? So if you just go through some of these bear golfers, yes, of course, someone should rightfully call out that one worked. And look, led to a nice little, further deeper corrective wave into the April lows. But so many of these others along the way here, like look at that one, Pat. Nasty bearish engulfing. We're down 1.125% that day, and the market just reversed it. Back here in May, bearish engulfing, market said doesn't really matter. You got a little bit of a sell-off a few days later, and then we ramped up. So will this bear golfer be like some of those other bear golfers where we just kind of reverse it and it has no follow-through tomorrow? We only really care about this ugly candle today if we get another down day tomorrow.
And hey, it's still fairly early. I mean, we could turn around by the close. Stranger things have happened.
Is your camera off? I can't see you.
I think. Yep. Just one sec.
We want to see you, Pat. All right, what's the first request?
First request is LVMH.
Coinbase is moving against me out here.
I'll try to fix my camera over here while we.
LVMH. I'm going to look at the over-the-counter one.
Okay. Yeah.
All right.
Because there's two. So there's MC and there's LVMH. What's the deal with that?
What's MC? MC's Moelis, isn't it? MC's Moelis. I don't know what it's all about. All right. Anyway, so for us here in America, if we wanted to buy the luxury goods conglomerate over in Europe, LVMH, we do have a pink sheets listing. LVMHF, that's what this is. It's really sloppy. I don't like it. So zoom out here. Looks super toppy. Looks kind of double toppy. It's been a strong stock for a long time. The real problem with this one is some great patterns. Some of the best bullish setups this cycle have looked like this, right? Where they're against those prior cycle highs, they break out. But this one got the breakout, failed, fell back into the box, broke out again. It's just so sloppy. This is such a messy chart. So here's what I would be looking for. I would call this a double top or a potential double top. That's how I would have my chart marked up if this was ever a stock that I would buy. And this is how double top confirms. You have to take out the pivot lows, the lows in the middle of the two tops. So this is a nasty range, a really sloppy range. We're kind of right in the middle of it. You can see that 200-day moving average cresting and rolling over above price. I don't really like anything about this below 845. And I think you could short it below these pivot lows at 700-ish.
Makes sense.
Nothing to do on the long side unless we're back above 840, 850. But really, I want to see this one back above the year-to-date highs.
Yeah, it's a messy one.
The stocks we're buying are near or close to record highs or moving towards them. And this one's on the wrong path.
On the wrong path completely.
Mhm.
Let's move on to Lemonade.
Yeah, I saw that they called out a hot corner buy.
Oh yeah?
No? Thought I
Oh, you're
saw.
saying in the chat?
Yeah. No? Hot corner CFO purchase this week. High short interest. Both of those things are true. So, what is Eric talking about? The CFO filed a Form 4 earlier this week, June 17th, reporting about a $300,000 purchase. I love it when CFOs are buying. What I don't love is stocks and downtrends like Lemonade. So let's look at this chart. Let's look at a weekly. Okay, not only is this a really, really bad trend, right? It's a nasty downtrend, but this is a property and casualty insurance company. I know that they call this InsurTech. It's one of those like Israeli tech companies. So like fintech, this is InsurTech. Here's the problem. Insurance stocks have been doing magnificently this whole cycle, long before that even, right? This is
Yeah.
IAK, the iShares insurance. And within insurance, property and casualty is like the best subgroup. These stocks look fantastic. And then you look at Lemonade and you're like, what is this? Like
What's going
I was
on?
this is a property casualty stock. So let's chart Lemonade relative to its insurance peers. This is LMND versus IAK. It doesn't get much worse, right? So nasty downtrends on both absolute and relative basis. Now, I already looked at this one. I cheated. I peeked at this one. I saw the questions. Look at this is strange, Pat. This is this year. I mean,
I
this is
know. That's just like
that's tight.
going
So
on.
actually, I Googled. I was like, is somebody trying to acquire these guys? When you see a stock just ping into a range like that, and then start trading like this, usually M&A stuff going on. I didn't see anything on the internet. Let me know if I missed something, guys. But this is tight, and then that's one thing to be tight like that. But this I like.
Yeah, also just how many failed breakouts there are there. I mean, imagine you see those two candles in what is it, probably February, that just a clear breakout, and then next day on earnings, you just get murdered there.
Yeah, look at this. So Pat's talking about the
I mean,
failed.
what a bullish two candles you have, and then just
It keeps trying. But you know what it didn't have any of those times, Pat?
what's that?
Didn't have the shake. I like a shake with my breakout.
Oh, I see what you're saying. So it didn't start from a failed breakdown.
Let's talk about why. Like, why do I like a shakeout with my breakout? And this is, just to be very clear, this is a short-term chart that we're looking at here. This would be a tactical mean reversion-y trade. You're trading a range-bound trendless stock, right? Zoom out, see that sideways 200-day. So we're talking about trading here.
But like in particular, this thing has just fallen asleep this year. Just
Yeah, totally. So, oh God, what's going on with my? All right.
I don't even know if falling asleep is the right analogy. I think it's having a heart attack or something this year. Just
So let's talk about why we want to shake out with a breakout. This is still a bullish momentum regime to me. We got overbought last fall, overbought earlier this year. Look at how, momentum refused to even drop below like 40 for most of this year. And then it, just pinged to basically like 29 and a half. Like I round that back up to 30. It didn't even get oversold. This to me is still a bullish momentum regime, right? That's why we have to use our judgment here as analysts sometimes. So I'm ignoring that oversold ring. This is bullish momentum regime for me. We get the shakeout. People get short, right? Shorts open new short positions when they see something like this, a range
or
break.
people get stopped out.
What?
Or people get stopped out. Yeah.
Yeah, sure. Longs get stopped out, but more importantly, shorts enter new long positions here. Then this happens, then that happens. What are the shorts that just got short doing? They're covering their short position. So this little shakeout below these pivot lows, unlike what happened the entire, time earlier this year when we were in this range without a shakeout, shorts enter new short positions here. That created incremental demand when we shot back into this range. Those shorts had to cover. That adds buying pressure to the stock, right? So that's basically the mechanics of a whipsaw or a shakeout are no different from the mechanics of a short squeeze. Maybe shorter term, maybe not as strong, right? They don't last as long, but it's the same idea here. we're back in this range. I think you get confirmation with something like this, Pat. Drop a VWAP here. I don't care. You could drop it here at this blow off failed breakout. They're both going to come in around 17, just below 17. That's your confirmation. I think then you get a range breakout here, 19, or you could just trade it back to 19. But from a longer term primary trend perspective, messy. I think it's tradable, but this is not a long-term buy.
Yeah, this almost kind of reminds me of Apple, because when it finally resolved out of that range, it had a similar kind of thing where it started as a failed breakout and then it ended with a failed breakdown. So you get that kind of shakeout.
And that's where and why we put that trade on Apple back then. I know exactly what you're talking about.
Steve, we only got one more in the mailbag, and then we can get to all the lovely requests here in the chat. So keep them coming here. But let's look at On2, and then we'll hit the chat.
Onto Innovation.
On2.
Wow. Speaking of a bullish momentum regime, Pat, look at this. Onto has not been oversold since the pandemic lows.
Wow, look at that.
This is one of the best streaks that you will find in the entire stock market.
Wow.
Has not been oversold since March of 2020. That's really incredible. Good for these guys. What does that mean? That means the entire bear market of 2022. Look at this. This stock did not get oversold. Let's check out the drawdown. It really wasn't that bad. 2021 highs down to the bear market lows. I mean, it doesn't look that bad. It's still 45%. Damn. All right, let's check out the weekly and see if we can get some sort of like a Fibonacci extension up here. I'm just going to fib out the 2022 base, see what that gives us. Kind of in the middle of a range there. We talk about this on here all the time, Pat, where really strong stocks like this can be hard to enter. You just want to find a way to do it where you're entering at a logical level and managing risk responsibly, also at a logical level. So something like this, you just want to get involved here in a name like this. VWAP, since that pop, right? We got a little breakaway gap right here. We're above that VWAP. As long as we're above there, I think you could treat it as a breakout and trade it back to this 265, right? The next Fibonacci extension. You can also do something like this and this is a little pennant pattern, right? You could draw it like this.
And by the way, that's a 3-month time frame. Forgot to mention that.
3-month time frame?
Yeah.
Yeah, then I think you 3 months is perfect to trade a short-term continuation pattern, which is what this is.
Yeah, I was going to say you're doing it correctly here.
This is the kind of pattern you want to be buying with that time frame. This is the best pattern for that time frame, period. If you told me, oh, my time frame is 12 months, I want a base breakout, right? I want a fresh reversal pattern. 3 months, I want a stock that's already in a primary uptrend. I don't want to deal with the mess that can come with the trend reversal. I want primary trend pointing up, firmly, clearly up, short-term continuation pattern. You buy the breakout. So I just gave you 2 ways to do that, right?
And momentum too. For a shorter term time frame like that, you probably want some strong momentum on it. Like you said, you don't want to be waiting for a reversal. You want to jump in while it's still moving, You
want momentum to look like that. So if you're going to trade the trend line break, let's call it 232. The VWAP, this candle needs to stop being so red and make lows, right? Because we're right on that VWAP here today. So 224. All right. Target of 265.
You want to move on? So actually, we just got 2 new ones in the mailbag. I'm sorry to keep you guys waiting, but let's move to Jonathan wants to look at AGX. Looks interesting to me. Just took out the 2017 consolidation highs.
See what?
What's that?
What was the ticker?
AGX. Says
Argon.
It's interesting. Just took out the 2017 high, so you might want to zoom out maybe on a weekly.
Engineering and construction, 1 billion. What's the time frame?
No time frame mentioned. Jonathan. No time frame, but he did mention it was breaking the 2017 highs. Yeah, Oh, yeah. There you go. That's a nice one.
Yeah, this is good.
I haven't seen this one.
This might be the chart of the day, Pat.
I know, right? This is it. This is the winner. I forgot we're doing that. I really like that idea.
This is, you got to beat Argan for request of the day.
Yeah, this is the one to beat. Jonathan, shout out to you. So
Yeah, nice.
far, the
Look at the
episode's
way,
not.
and look at the way. So I just fibbed out this massive multi-year base. He's talking about, this breakout above the 2017 highs. Absolutely. Um, Look at how it just kind of paused and coiled here at the 38%. Love to see that. Blasted through the 61. Now we want the first extension, which comes in at 105. And really, I'll flip it to a daily now. Let's just see how it's behaving and reacting to this polarity zone. Because some overhead
It hasn't really decisively broken those yet. It's still at that point where it could fail.
So look at this, Pat. So we see this all the time, and I love to see it. We like setups like this more when we get this. So this is a breakaway gap to and then through the old all-time highs, right? And that's what Pat means when he says decisive. Like, breakaway gap, is there a more bullish candle? That's great. Now what needs to happen? It needs to hold, right? So I would draw it like that. And like that.
And Steve, especially if the broader market starts pulling back here, even if it's just a 5-10% pullback, I think a setup like this is probably one that's pretty vulnerable, right?
Yeah, this thing could get blasted, and then we'll be drawing it like this. Oops.
Oops.
Right.
Not yet, though. We're not.
So we don't want this to be an oops, and that happens on some sort of action like this, right? Back into the box. Ooh. We want it to look like that. Bang. So I would actually wait here, Pat, because you're right. And what's doing? Oh my God! Look at that momentum.
Look at that, though.
So
that
good.
is what you want to see.
That is not a divergence. This is not. Do not draw. Some people
are. Steve, I was going to tell you to look for momentum there because a setup like this, that's one thing that could kind of.
I expect a divergence on something like this, Pat.
Right. Exactly. And you don't have it. So
that's great. If this holds, the red lower bounds here, which is the lower bounds of the breakaway gap, like 74.25, that's got to hold. Let's get a breakout back to new all-time highs. It'd take a week or two, right? Something high and tight here would be just fine. Is that what
Steve, how about that candle from, what is it, maybe Wednesday last week or something like that, Thursday, that kind of dragonfly hammer candle right there?
Which one? Oh, this one.
That hammer candle right there. I mean, that's a great candle to manage risk around. You could either use the gap up as your kind of stop out and cut it a little early, or you can use that. I mean, you have two clear levels to lean on.
Yep. Initially. Sometimes when I really don't want to get shaken out from a setup, like, I'll do that, Pat. You know what I mean? I'll look for something a little bit lower, but you're absolutely right. That's something logical. And like, you really don't want to get shook out, you could do that too, right?
Yeah. Oh. And another beautiful thing about this setup is you could start it as a short-term trade, or you could have it, where it starts as a short-term trade and it kind of develops. You let a little bit run, you take profits on the way up. We always say you don't want to let a trade turn into an investment, but in this case, I think it's okay if you do.
I think you're right. Yep. And these give you logical levels to kind of scale into that investment.
In fact, hopefully that trade will give you an opportunity to turn it into an investment.
How are the homies doing today?
That is a great question, because those are one of the biggest question marks on my mind.
I want to buy this failed top. All right, what's next?
You know what it is? You know what? We got to get to the other ones in the chat. We'll save that for another day. Let's take a look at SAP. That's the other one that came in the mailbag, and then hopefully we'll get to the chat after this. But is SAP the place to be? This is from Mark, looking to enter above 180, 185, and setting a stop at around 175. It's coiled nicely since the end of March, around the 161.8 extension of the 2020 base. Looking for it to complete a measured move of that base up to 205.
Okay. So
sounds like he's doing the right method here.
Yeah. So Oracle's kind of the closest peer to SAP. So new all-time highs for Oracle makes me like this more, right? I would always just check Oracle's chart. if I'm thinking about a trade in SAP. So that checks. That checks out. I would fib this. He's doing a measured move. We'll talk about that. I'm going to fib it because look at that.
Wow, right there at the 161.
Yeah, and it's really 180. Also, though, this is
Yeah,
already.
that's what Mark mentioned. He said it's coiled nicely right since the end of March, right around there. So yeah,
And then,
definitely.
so let's zoom in now, right? Because everybody sees this.
And I would quibble with him a little bit and say that's more like a flag. Either way, it's bullish. It's a bullish consolidation pattern, but you know, I'm
flag, pennant, head and shoulders, top. Like
definitely being that guy. I'm splitting hairs here, but either way, bullish continuation.
All right. Pattern, please. It's a short-term continuation pattern. It's above any VWAP, right? So to illustrate, it's above all the VWAPs. I can just tell by looking at it. And then I think you want to play the breakout to the 261. I'll check the measured move, see if that gives you something better. But above 182, or really, I think you could. Use 182. Then we want to be targeting the 261, which is like 246. Now, if we were to measure the move out, let's see if it would give us a target higher than 246. A measured move, we're simply taking the difference between 143, the upper bounds, and call it 80, the lower bounds. That's going to measure out to 63 points. We tack those 63 points onto the base breakout level. Let's see where it puts us. Yeah, it really depends on the time frame, right? Because the measured move is going to get you to about 206, right?
Yeah.
The 261 will get you 246. So if you tell me, hey, I have a 3-month time frame, yeah, you want you want to use 206. But if you want to hold this longer term, 246 is the 261.8. So that depends on who you are and what you're trying to accomplish.
Yeah, when you have two targets like that, maybe scale out of a little bit at that first one and then let the rest on to run there. But you ready to get to the chat?
These international tech behemoths are all doing really well. Let's just look at what some others are doing. ASML, you got the breakout, first target hit. Let's go. Taiwan Semi stands out as another one. We got the breakout, first target hit, right? So like SAP kind of falls into this, international or foreign technology theme that's working really well.
So let's hit the chat. We're gonna start at the very top here. Let's look at Caterpillar. The cat.
Early leader.
Yeah, I vaguely remember this one leading out of the bull market. Am I making that up or leading out of the bear?
Oh yeah, absolutely. I mean, this one took out those prior cycle highs in January of 2023.
Whoa, yeah, you're right. And it wasn't until after NVIDIA broke out that people were ready to maybe call it a bull market.
You always say this about people. I guess your people. You're on the internet.
The broader majority and like just in general, nobody was ready to call it a bull market yet. There wasn't a popular opinion, Now it's definitely a popular opinion, wouldn't you say?
I try not to say. I guess I don't know. Yeah, it's dude. Playing that game is hard. It's been a bull market really for 2 years now, and you said it was Fibonacci Day, so let's celebrate Fibonacci.
No, that was Tuesday.
Yeah, so Fibonacci Day was Tuesday, and just look at how price reacts at all of these levels, right? Like a lot of times I don't put the retracements on here, but just look how good that was, right? And we finally get above this 38%, right? We're still trying to bottom down here. We get above this 38%. How do we do it? Breakaway gap. Then we finally get to the 62%. And we retest it. Right, really nice right here. And then we break out finally, and we run right to and stop at the 161%. See, like, do you notice a trend here? In the Fibonacci's just being like magnets for price, right? So we stop there, pull back, shoot higher, test it again, right? Slow down, pause, give some back, build a little coil out, break out, hit the 261 now, and then this must be a top, right? I don't know.
No.
Should I draw it red or green, Pat? Listen, these are typically not tops. When you see a 200-day moving average, pointing straight higher like this, and higher highs and higher lows for years, right? And like Pat just pointed out, an early cycle leader breaking out early 2023 to new all-time highs. Here's how you want to do this. And guess what? This VWAP is going to come in and act as great confirmation. Let me just show that. Drop the VWAP at the all-time high.
And look at it trying to reclaim that neckline there in a red tape. The S&P at least is down, and this one, it's really trying.
I love this too, Pat. Look at this.
Oh, you're saying
Refusing to hit oversold. Yeah.
it didn't hit?
It didn't hit from what I could see. Passes the eye test. And you know what else I got to point out? Here's what happens. Bull market tops are the best continuation patterns because they're not tops, right? Was this a top? No. We rocketed higher. Was this a top? No, we rocketed higher. I would imagine this will be the same. If we come back on here in a month or two and say, oh, it's still a bull market, Caterpillar will have failed this top and be back to and through 380. And then the next stop will be that 423.6 at 514. I think this could be a great trade, though. Just back to that fib, the 380, because it's also the pivot highs. Right? There's some price memory there. So that's a great trade to take profits right there, 380.
All right, let's move on to Flex. This one comes from Nicholas, and he says, zoom all the way out. Zoom out.
I know what it looks like. So this is the old Flextronics. It's got one of the most beautiful .com bubble bases.
Oh, yeah.
We've liked this one for a while. So, boom. Some of our favorite patterns, but only for the patient. You tend to get a bunch of false starts, early starts, failed breakouts, whatever you want to call it, at the upper bounds of these bases. But when they finally go, and I'm going to show you a great recent example, you want to own these chart patterns as much as any in the market. So if and when this one goes, I want 52. That'll be the first target. But don't be surprised if you get this, right? Again, you have to be patient because these tend to go like this. Breakout, failure,
Yep.
right? How'd I do
I
on
was
that?
going to say, if this thing builds like a handle almost, like a little consolidation towards the right, that could take, you're looking at a monthly chart, so that could take a year or two, right? So just making the point that you really have to be patient with these and not expect them to just go just because it is a beautiful big base.
You tend to get something like this up here, right? And we just ran up. This one's been on a tear. It was at $20 just in December, right? So it's up 50% this year. Looks great, but I wouldn't be surprised if you get a little bit of sloppiness here. Micron is one that just went. Merck is another one that comes to mind. But let me just show what happened with Micron, right? Because I think this is a great example.
Yep, great example, yeah.
Like we get there.
And it looked beautiful then,
Yeah, it did. We get there. We fail on the first attempt, and we fail again here on the second attempt. You get a deeper corrective wave, right? And then this thing just took off, blasted higher. That's fantastic. All right, so something like this in Flex, don't let it scare you away. Keep it on your radar, and then just enter back on strength when you finally get. Okay, so I would say if and when it finally happens, 52 is a good target. Got to be above 32 though.
All right, let's move on. We're getting a lot of the big boys, a lot of large caps, a lot of large cap kind of value names. Let's do J&J next. This one comes for Viper NB 47.
Probably not a top, but I mean, we looked at this one last week, didn't we, Pat? The relative weakness is just terrible.
Oh, yeah, we did. I think we looked at it in relation to another name, but
like a top in a huge American blue chip stock in the middle of a bear market, top like this. I don't know. It's not like I don't want to go run and short this at all. I want to go run and short anything. But, if you had to, here's what I don't like about this one. It's not this pattern that I don't like. If this was like, a early cycle leader or in a strong industry group or something, I'd be like, ooh, that's probably a failed top. I like this level, very critical polarity zone, 2018 highs. That was a huge level. Now, again, that old resistance flipping into support, maybe you probably have a bullish momentum divergence. Yeah, look at this. So a lot to like here.
Oh, wow. That's quite a sharp one too.
But why wouldn't I get involved betting on a failed top here? Like we did with Apple a month or two ago. What makes this one different is the relative trend. This is disgusting.
Yep. There you go.
I can't put relative trends like this in my portfolio.
That thing's falling off a cliff.
I don't buy stocks that, are trading like this against the broader market. And I know S&P is tough to beat, right? So let's just look at it against its healthcare peers. S&P is a tough benchmark these days, right? Mag 7. So Johnson & Johnson versus healthcare. Like, it's terrible. There's nothing to like about this. The weakness is really bad. Oh, Pat, didn't you do this one? Let's lower the bar even more. Johnson & Johnson versus...
Yeah, right. I think this is maybe what we did the last time with it.
No matter how you want to cut it, right? Let's all right, you know what? Let's try. This is an experiment. Johnson & Johnson versus, let's really lower the bar. ARK. Can it outperform the worst stocks in the market? Not since last year, right? So, like, it's really bad. So Johnson & Johnson is a no from me, dog. What's next?
All right, well, the chat's cooking here. What's going on? Trend Spider, Jonathan, Sean. All right. We're skipping around a little bit, but somebody wants to hear, or Jonathan wants to hear your thoughts on Mara. See if you still like it.
First of all, Jonathan knows my thoughts on Mara.
Well, why don't you share with the group?
Pat, I am so long all of these Bitcoin miners right now. Literally everyone. I buy everything. I own common and pretty much literally every single one.
So you say that, but you're still not buying just the ETF outright. You're still being selective, kind of, right now?
I'm not buying the ETF outright because I don't want to deal with that, but I bought just about every Bitcoin mine. I'm not in Hive. I'm not in that Ozark one or the one with the O, but I'm in Hut. I'm in Mara. I'm in Riot. I'm in CleanSpark. I bought the Cypher warrants. I've been in Wolf. So I'm in I created my own basket ultimately. Nice. Are there some I don't own? I'm out of Bit Farms. I was in it. I'm going to trade them all because I think they all represent a great trading opportunity right now because there's a catch-up trade there with Bitcoin. And there's also something different just going on over the past few weeks where these things are ripping. Bitcoin peaked on June 5th and is down about 10%. Wolf is up almost 100% over that same period. So they're kind of calling bullshit on the Bitcoin action or jumping a Bitcoin breakout. So I like them as trading vehicles for right now and for the eventual Bitcoin breakout. Longer term, I'm making a naughty and a nice list of these Bitcoin miners. I have gone so far down the rabbit hole. Some of them are just bad operators, like Carousel Capital in their short report a few weeks ago called them snake oil salesmen, and they're not wrong about that. Like if you're paying out 40% of your top line in stock comp, Carousel Capital wrote a short report and
on which one?
Riot.
On Riot.
Yeah. But it's the whole group. Like they were talking crap about the whole group and then they're like, Riot's our vehicle. Sure. So we're going to make a naughty list and a nice list. And the ones that are trying to be good operators and clean up that SG&A expense line will go on the nice list. And then the others will go on the naughty list. And I do plan to hold some long-term. I'll talk about it once I make that decision. But for now, I'm buying them all. Even the worst ones that pay out the highest amount in stock comp. Know why? Because I feel like there's going to be even more massive catch-up trade from them because they've been held down. Riot, Mara, CleanSpark, they all pay way too much. Yeah.
A lot of people are agreeing with you here, but somebody wants to know how would you manage those positions in case Bitcoin does see a pretty significant breakdown here?
With tight stops on all of them because they all have some very clean ranges. I'm selling puts against the lower bounds of these ranges like literally every day. Pat knows. And that's worked a lot. So what I've done over the past 2 weeks, I'm trying to jump or be ready for this eventual Bitcoin breakout. I'm selling puts, buying calls, and then as soon as I can, I'm trying to cover those puts 50, 60, sometimes 80% lower so that they can pay for at least help fund the calls. So we more or less just broke even for the past 2 weeks doing this. So while the calls aren't paying much yet, at least in the Maras and the Riots, the puts are at least paying for them because the stocks aren't falling. And then, Wolf, and Iris Energy and Hut now like are paying. So while Riot and Mara are not, like this is what the leaders look like. So let's just go back to Mara and show how
This
we
is
would do that.
asking about Corz, CORZ. Is that
Yeah,
one
that's I don't own that one. That
you
that
don't
they
own
had
that one?
that buyout offer or whatever. Yeah, that's one I do not. Okay, here we go. So the how do we manage risk in Mara? The same way we've been managing risk. Do we have been abusing this one on the long side, just trading these wild ranges since last year, and it continues to work for us. 19 has been our level since we first covering the stock last year. So 19 comes in right here. You can also draw this like this, right? That trend line breaks. That's definitely an out. You get confirmation here. So again, you can manage risk in so many ways here. You can drop a VWAP from the pivot lows, right? That'll keep it real tight.
Yeah,
You
got
can
the
use
VWAP
19.
pinch there.
Yeah, you could use 19, right? This is a very well-tested polarity zone here at 19. So on a break of 19, you could be at, we're at 20 and a quarter today, right? So that keeps things really tight. Or you could wait for a trend line break here, and that could get you in earlier or later, depending on how long it takes, right? Because this trend line is going to keep rising price. So there's a bunch of ways to do that. I don't like it below 19, but you do want to give it room for shakes like this, right? Like last week, we shook below 18. But then before the close, we were back at 1983, right? So like, be careful, be patient, try to give it more room rather than less. Get out at the close, not intraday, right? There's stuff that we could do to not be shook. So you do want to be careful to shake out, but you also do want to keep it really tight, because if Bitcoin were to fail miserably here and the market internals in crypto are not good, these things should get blasted. Like I keep coming to my desk every day with the way Bitcoin's trading. I'm like, why is Coinbase not down 5-10%, right? So the way these things are holding up is strange. I think confirmation above this VWAP here, or you could use this range high here, right? Draw a little trend line like that. Either way, that's confirmation. And then I think if you're looking for a trade, get it back to those pivot highs, you're going to make at least 50%.
So next, I want to take a look at ARM next. Apparently, we missed it on Tuesday.
Okay. Again, Pat, the international technology theme, right? This is that.
What else? What else are you seeing? I haven't really noticed it yet. I mean, like,
I just told you. Taiwan Semi,
oh, yeah,
ASML,
right,
SAP,
right.
ARM. This is a UK-based semiconductor company. So, I mean, look, today is nasty. Down 9%. What is going on? Hold on. Let me check my news feed.
I'm guessing it's just semis.
Yeah, I'm not seeing any
they're down, but
specific.
they're weighing it.
No
But you
specific.
know what? SMH right at the Fibonacci extension here, man. Like this is the place where it would make sense to see a little bit of deeper correction.
Yeah, look, you know, here, I would fib this out like this. So your target's at 189. You don't want to own it back below 150. So 8 points lower. We're stuck in the middle of this range here. This one's really not actionable here. You want to let today's action kind of settle. See if we get follow through on it tomorrow. I wouldn't touch this here. It looked good this morning.
Zoom out a little. I want to see it a little longer term.
Nothing, just IPO'd.
Oh, that's right. Yeah. Yeah, we were looking at that one. Let's move on to getting some questions about energy here. You want to start by looking at XLE and then maybe on a relative basis as well?
I want to like these stocks. Today is the first candlestick that is making me interested at all for months now. I want to buy Exxon. Keep flirting with the idea of buying Exxon. I keep trying to convince myself I should buy Exxon. It's just tough right now because these stocks have been really bad.
You know, the challenging thing is, and probably the thing stopping you is just the opportunity cost of it, right? I mean, tech is working so well. Why would you sit in Exxon when, you know?
Like crude oil's been good for a couple weeks now. This is crude oil. Crude oil has launched off of those early June lows, right? 71 to 81. Like, can somebody tell energy stocks? Like, look at this. Terrible. And like Pat says, opportunity cost. Can I show you what opportunity cost looks like in a chart? That's opportunity cost illustrated in a price chart.
And meanwhile, there's been a bull market through that whole entire time too.
So what will get me to finally buy some more energy stocks? You got to get back above here, right, Pat? Simple as that. This is XLE.
What's your line in the sand? Like 94?
Yeah, 94. I want that VWAP, right? More than anything.
Yeah.
And then in that case, what was the requested ticker? Just XLE, or was there?
Yeah, just XLE. I'll read you the comments here. XLE SPY is an indicator, and XLE is a vehicle. Took long in XLE, risk reversal swing trade on Tuesday, ascending trend line support on XLE, wedge down on XLE SPY.
I kind of get it. That's it's I don't know. It sounds like he's really trying to convince himself that he likes energy too. So I can relate. Here's the problem.
I mean, it hasn't broken down. In fact, I mean, obviously it's ripping today, but even when crude was doing its thing, it wasn't breaking down. It's like it's given the chance and it just hasn't.
Yeah. This is no good. He's looking to get long, right? Not short?
Yes, sounds like it.
Okay. There's no signal here for me on the XLE SPY chart. Underperformance here has been nasty since last year. All right, so for 2 years now, this was late 2022, straight line lower versus the broader market since. You could call this a massive top, and it certainly looks to be completing. First, we got to get back above here, the pivot lows, which we're really not in a real, material way. At least we're right there. And then you really want to get back above this August 2022 low, and then you're going to want confirmation with the new high. So there's so much work to do here on a relative basis. The relative trend looks even worse than the absolute trend. Opportunity cost in both looks like even downside on a relative basis. So there's damage to repair here. First, XLE back above 94 or this VWAP, and then XLE SPY back above the pivot highs of 19. I want both of those things before I get excited at all about energy.
I think you covered pretty much all of energy here. Let's look at ALB. Lithium.
Yeah, I saw the question about that. He said, why isn't ALB
oversold? Yeah.
The question was like, why isn't ALB working? They're the industry leader in lithium.
Right. Gotta bounce in.
The industry leader, right? But if you're the industry leader of a bad sector industry of the economy, is that really good? So lithium stocks have been terrible. The lithium market in general is awful. So Albemarle is the industry leader of a terrible industry group.
And Steve, we've seen so many crappy areas of the market have a pretty nice rebound. I mean, you've had China, you've had solar stocks and some of those clean energy plays, but lit still hasn't gotten the memo. It still hasn't had its kind of rebound moment at all. Do you think it ever gets it, or
41 is the level. It's short below there. It is a short below 41. If we can get some sort of basing here or bottoming action, right? Something like this. Bang, bang, bang. That's cool, right? Maybe we get involved in the future once we can draw something like this on it, right, Pat?
Yep.
For now, but momentum's completely blasted. Yeah, terrible. No overbought reading since January of last year. This is lithium. I don't want to own the industry leader in lithium unless this chart looks better. So this has to be above 41 to own Albemarle. Then what does Albemarle have to look like for us to own it? We're going to draw it really similar because it's a huge component. It's probably the largest weight in that ETF. Albemarle, look at this momentum. Oh, God, that's so bad.
It's really bad. Yeah, that's really
right?
bad.
All right. So look, Albemarle is the one driving that LIT ETF lower. All right, check this out. So we already broke below those 2017 highs. Albemarle broke below them last year. Could have shorted it here against 140. Now what's it doing? It's confirming it's ready for another leg down, right? Absolutely getting obliterated here. I think if you're short, you're looking for this one to head back to the 50s or 60s. And the only way you could ever get long something like this is first we got to scoop back above this shelf of pivot lows. That happens around 110. And then really that's not enough for me. I wouldn't want to touch it if we're still below those 2017 highs. So I would want it to look like this. And you know, this isn't going to be an oops at this point, right? Like something like this.
That is a clear resolution.
Right, Pat? Like if this was like 1 or 2 red candles.
That's what we call it.
This is a confirmed decisive breakdown. This is not going to be an oops. So like this is going to take some time, right? This isn't going to scoop and score higher tomorrow. Absolutely not.
Right.
So let's get back above those pivot lows of 110. This is the market telling you to stay away from this thing, by the way.
Yeah, that's straight up technical damage. Almost like I can think of like regional banks where on those like really bad down days in March, you just knew this wasn't going to be an easy trade where you just buy the dip and it goes back. This is going to be a messy, you know, if it does bottom, it's going to be a messy bottom. It's going to take time. There's going to be starts and stops. This is probably similar.
Yeah, when you see action like that, you maybe put it on a list if you're interested, right? And look back in a week or a month or a quarter or maybe even a year. But this one really,
maybe even a year.
Maybe never.
So we just got a pretty nice compliment here from Rick. He says, unbelievably underrated show. The fact that Kramer gets more views is proof that the market is inefficient.
You know, Rick, thank you. If we ever got like 10%, 1% of the views of Kramer, this show and whole network would be a phenomenal success. So.
I was going to say, I'd be worried if we got Kramer's kind of viewership, because then some of these beautiful trades, they might not work so beautifully.
Yeah, I would fade us at that point.
Yeah, right. I would be fading us. Yeah.
All right, what's next?
So let's take a look at, so Harminder wants to see CLSK.
Yeah, Harminder.
Specifically your VWAP analysis on it.
Arminder missed you at the hot corner today. All right, CLSK. I'm long. God, I own so many calls. I probably should have sold some this morning. I get greedy, Pat. So this is one of those risk reversals I talked about from last week that actually worked. You know, the puts paid for the calls, still long the calls. I bought the this Friday's expiry. You got some sort of breakout here. I need this. I need this candle to turn green again. Otherwise, here's what we'll do.
Have you tried blowing on it?
So otherwise, why do I say that? I don't like, see this diagonal resistance line? I don't like that. So I'm looking at this one at this point like this. Boom. Boom. And the fact that we flirted with a high back above that May pivot high, right? And now look to be failing. Am I being really cute here? Yes. My options expire tomorrow. I have to be cute, right? So you never want to freak out over one red candle, but when you expire tomorrow and you know that fate is working against you, yeah, you can, right? So I'll probably be out today.
You really got to know your time frame is what you're saying, kind of, right?
So I don't like this for me, but for most people, like this is still fine here. It's still chopping. The whole group continues to work. Did I like adding to this position down here, right? When it was looking more like a failed top? Absolutely. So this is where I like getting involved in clean spark and where I have been. Up here, I don't know. Maybe this range is still intact, right? Not breaking out yet. And this one heads back to the lower bounds of the range. This has been such a frustrating trade, right? For a lot of these things, like the riots and the maras and the clean sparks, because they're holding up, they're coming off the range lows, they're refusing to break down, but some of them also aren't breaking out. They don't all look like Wolf or Iris Energy, right? So I think that's it. You really want to see this momentum stay intact here, and you want to see this candle turn green today, and to follow through tomorrow. I want to see like a really clean and clear breakout here of this whole situation, right? Then I love it. So you could even wait and get confirmation above, you know, the May pivot high, or if you want to be more careful, you could use the April pivot highs to around 21.25. But if you get follow through tomorrow, we're probably heading back to the lower bounds of this range, 1450, right? That's it. Be patient, but I continue to believe that this is not a top. You know, top is refusing to break down. And then what are we targeting in Clean Spark? I really want those old all-time highs. Let's look at it. $42. So you get a double. You know, if you wait for confirmation, get in around 21 here, right? At the April pivot highs, then you're double back to the all-time highs, 100%. That's great. And then at that point, you have confirmation, conviction that this little short-term, you know, range or consolidation pattern has resolved.
Good
All
stuff.
right, that's the last one. The
What's
voice
that?
of God is kicking us off. We got another show on the network at 2 o'clock Eastern time. Otherwise, Patrick and I would love to do this for another half
Oh,
hour.
we could do it for another 2 hours, right?
All
But
right,
yeah,
guys.
any last thoughts? Anything you want to share? And do we have a winner today?
Yeah. SAP was good. What's the one that we said was the winner?
I believe that was AGX. Yep, that was from
AGX.
Jonathan, AGX.
AGX is the winner. That's my pick.
But it needs to stick. Needs to stick that breakout. Really needs to.
It's got to stick it. Same with
So there was one we didn't get to. It was BJ. We'll try to take a look at that next week.
next week. I love BJ's though. I think it's a great it's a great way to play this whole like Costco killing it theme.
Yep, broke out like 3 weeks ago. Really nice base. A little bit of momentum divergence there, but holding up pretty well so far. But Steve, any last thoughts?
That's it. Thank you guys, as always, for joining us. We will be back on Tuesday at 1 o'clock Eastern time with more chart requests live. In the meantime, join us on the morning show every morning, 8:30 a.m. Eastern time, right here on Stock Market TV. Peace.
Thank you guys so much.